Good afternoon, everyone, and welcome to the Daily Volatility Box Report for January 9th, 2020. We are TOSindicators.com, home of the Volatility Box. In today's video, we'll be taking a look at showing you how to time these reversals in the markets. Today we used, ignore this video, it'll be updated, but today we used the Volatility Box to help us time some reversals in almost all of our markets. We had the S&P, the Dow, the Nasdaq, the Russell, gold, along with the 30-year bond. And out of all of those, the only ones that didn't work out using our Volatility Box levels was the Nasdaq market. So we'll cover both our winners and our losers. But really, let's start by taking a look at the checklist that we have, which helps us time reversals, right? This is a checklist that we repeat time and time over again. And we have rules for whether it's the indices or say something else like the gold futures market or the 30-year bonds. But first, we're always looking for that price action to make its way to a volatility box edge. And in the case of our futures market, that first edge is represented with that blue dashed line, which we call our entry line. Once we have price action breach a volatility box edge, and if we have the indices, that's enough for us to take that trade. Right? We're not looking for a confirmation signal with the indices. We don't really get entries there as often as we do. So whenever the markets do come down that far with us for the indices, we get in. And some of our traders like to scale in with the entry line being the first place of the contracts, and then the beginning of the clouds being where they add in more contracts. However you do it, you don't need to wait for confirmation signals there. However, with some other markets, we do look for confirmation signals, and we've talked about this time and time again. It's with the dynamic RSI candles and the Wada-Atar indicator. And for all of our futures members, we sent out that test indicator that we're looking at, which is the edge signals, at least if you requested it. It's something that we're testing, and if it ends up panning out, which so far it seemed to be pretty effective, then that'll be something that's added in just as a freebie with the volatility box that really helps time some of these reversals. And then finally, once we have that confirmation, we then just follow our simple trade rules where we're looking for our first risk to reward ratio to be hit. That's our first target. And then our second target is based off of the target line, which is that gray dashed line. So really, that's our simple practice in which we can time reversals. And using that, if you just took today's statistics as an example, we see that the volatility box gave us 5 winners and 1 loser. And that 1 loser was in the Nasdaq Futures market. However, if you use some other volatility models, like say AutoChartist, you'll notice that today wasn't so great for you, right? We had 0 winners if you used AutoChartist, and all 5 of them were losers, since those models don't really account for the same volatility that our volatility box models do, where it's personalized and tailored for each market. And that's the reason why we only have, I believe, 8 futures markets currently, and we're looking at adding some more, but it takes some time to build this personality around those levels to then be able to deploy these same volatility box levels with the same level of confidence that we do with the indices. So we have further details for each of these trades on our blog post for today's market activity or the daily report. And so we cover, say, the S&P. We'll look at charts for this, but if you want more details, you can take a look at the blog post. Another thing that we'll cover in today's report is that trend trading list. And in yesterday's list, the stock sale made our candidates list for whatever may be likely trending. And today we see that the stock had a really nice move up higher, almost 3% from our entry, a little bit more actually. And we'll talk about where our entry was, what that first target was, along with how far the stock actually moved. And if you're interested in this sort of trend trades, we also have a list that we've published on our website of some potential stocks that you may be looking at. These two are off of the conservative volatility box models, and we're looking for that cloud to be breached in the first 15 minutes, which then gives you a signal that, hey, we may be trending in the marketplace. So really, those are the 3 tickers here. Now let's get on to our charts. So we'll start with the S&P, and we'll cycle through all of these charts. Let's actually bring up our grid view, and we'll maximize the S&P sell. And here we have really just 2 indicators. We have our volatility box, and then the arrows are our edge signals indicator. Our first entry came as price fell perfectly into our volatility box here. And in the case of the S&P, the volatility box captured this move almost perfectly. We bounced up from here, giving us both that T1 and a T2, which was a really nice gain with both contracts being taken off for a win. Now, if we keep cycling through, the Nasdaq was a slightly different story, right? So here, if we load back our aggressive volatility box, which is what we were on, our entry came, and instead of having that same bounce up higher, we actually got stopped out before the Nasdaq did end up continuing up higher. However, this is where we just respect our rules. It's one of those things where you can't really have all winners in trading, and the Nasdaq was our one stop out for the day. However, we did have the other 5 winners, which helped us not only account for the loss in the Nasdaq, but also come out on the day as winners, up almost 800 and some odd dollars. Another thing that we'll take a look at is for those of you that like trading only conservatively, if you're always on our conservative volatility box, the S&P, the Dow, the Russell, they didn't give you entries today. However, the Nasdaq did give you a beautiful entry, and using that conservative model, what you'll notice is your risk to reward is far better, right? That first contract, you were risking right around 20 points to try and make 20 points, but your second contract was risking 0 points since we move our stop up to break even with a max total gain of 32 points, which we did hit. So for those of you that trade only conservatively, yes, you do miss out on some entries like the S&P, the Dow, the Russell today, but you do also occasionally get those really nice winners where the risk to reward ratios are stacked highly in your favor. Let's keep going down the line. Next up, we have the Dow Futures, in which we had our aggressive volatility box. Same sort of thing as the S&P. Price action fell into our volatility box. We had an opportunity to catch this reversal, time it perfectly, and then ride this move up higher, where you can see that for across the board for all the indices, our volatility box really captured the place which was the absolute low to time these reversals in the marketplace, whereas other volatility box models stop you out right here, and right here, and that's really where we're just starting to look at entries. Next up, we have the Russell Futures. Same sort of thing in the Russell Futures. I'll stop sounding like a broken record, but you can see price action once again fell into our volatility box levels. We had a nice follow through up higher, and we came back down, tested the levels until we had this nice burst move up where we hit both our contracts. We're taking off right here for a total gain of, I think, 3.5 points per contract. So a nice win in the Russell. And now we've mentioned this, that for the indices, we don't need confirmation signals. They're nice to haves, but we don't need them. However, with something like gold, which we don't really have a concrete plan to trade this all the time, the confirmation signals now give us more opportunities to trade it outside of just that 6 to 7 a.m. hour that we typically used to look at. Right, in the case of the gold futures, we had price action slam into our volatility box right here, and we had the confirmation signal as we had a bearish arrow right here. Now this trade is valid up until we hit our first target. In this flush move down lower, we did not hit our target, so this trade was still valid. And this is where you had your confirmation signal. You had another opportunity to get back in before what ultimately ended up being that puke down lower, hitting both your T1 and your T2 levels, right? And for those of you that like to trade micros, you have MGC here, which is also a fantastic alternative where you can start to scale in the position if you'd like. You also had GLD options, right? So plenty of ways to play this move down lower in gold. And like that, we also had another entry in the 30-year note. So here in the 30-year, we had signs that we should be switching on to our conservative volatility box with this first candle right here, which basically encompassed the entire hour's move. And that gave us almost free information to switch on over to our conservative volatility box. Now using our conservative volatility box, we had our entry come as price slammed into our volatility box lines right here. You had the confirmation signal happen right here, and then you had an opportunity to re-enter. Our stop was outside of the volatility box, and this is where, if you were cognizant, we've talked about this in a few videos, we were close to that even price point of 157, so you either had to be well under it or a little outside of it. And in our case, we gave it a little bit more breathing room than necessary. In either case, you didn't come close to hitting it before you hit that first target, in which you took off the 5 ticks, and then the second contract was taken off for a break even right here. And next, we'll take a look at sale. We talked about sale in yesterday's video, so now let's load up our stock volatility box right here. And for sale, we were looking for sale to break above our volatility box clouds in that first 15 minutes. And that price point was 26.02. This was captured in yesterday's daily trade update. It was also in our blog post. And for our volatility box members, you had access to this very specific level. And we breached this level right into the market open in the first 3 minutes, however, with this yellow candle. Our stop was below yesterday's close, which ended up being a nice level, right? We wouldn't go below our volatility box cloud here because price actually did close below it. And so we gave it that slight extra room using this as a potential pivot point, and we looked to trade this up higher. Right, we gapped up and we were looking for a gap and go here, not with earnings, but just a regular gap and go. And we did get that same move. Our first contract, we were looking at risking what would have been our stop, which was a 1.7% move. And we got that 1.7% move fairly quickly. Then what we got is price action continued into our volatility box levels. And this is where if you have contracts, if you have shares, you can start to look at scaling out in a systematic approach, right? We have our volatility box levels, which start to give us some stretch targets, because if we measure this from our actual entry point, our first target would be a nice 3.28% gain. We hit that. Our second contract would have been a nice 4.59% gain, and we didn't get close to hitting that today. However, this is something that may still continue to hit tomorrow. And at this point, your stop can be resting at break even, and you have a really nice cushion. Our entry was at 26.02. The stock price is currently at 26.68, and we're looking to see how high is high. You may even be moving your stop up now below this pivot point right here, knowing that this is where price action closed for the day. And so tomorrow morning, if we open down a bit lower, then you've captured much better gains than what we expected even using our first target. And if we continue to gap up and moving in the same direction, then our volatility box levels for tomorrow start to give us some really nice targets. Hopefully that gives you an idea of how to trade some of these trending stocks. For those of you wondering, fades are still perfectly valid on our primary strategy. However, this gives us new sort of information that we can start to use to prepare for the next day's trading activity. Like sale, we have a few other stocks on our blog post for today. And apart from that, hopefully this video helped you in learning how to time reversals a bit better in both our futures as well as our stock marketplace. The same strategy carries on in stocks. It's really just the idea of having a systematic checklist approach with volatility box levels that you can trust. Hope everyone has a wonderful day, and we'll see you in the next daily update. Take care, everyone.